Welcome to Audit Documentation. Audit documentation is how an audit team substantiates the work that they have done. It helps to show others where they have been. This is a lot like the story of Hansel and Gretel. The documentation auditors create is similar to leaving breadcrumbs behind them in the forest to leave a trail of where they have been. The auditors use GAS and standards set by the Public Company Accounting Oversight Board to guide them on where to go during their audit. The breadcrumbs they leave behind help to show that they checked for discrepancies in accounting principles and looked for material misstatements correctly. But, much like the story of Hansel and Gretel, leaving breadcrumbs behind isn't a perfect system. Out of the 664 audit deficiencies that occurred in the Big Four accounting firms, 354 showed a failure to perform or document procedures properly. When the Public Company Accounting Oversight Board and other inspectors of auditors come to check over the work, if there is no paperwork documenting that procedures were looked at, they conclude that the auditors failed to evaluate the issue. Even if they did evaluate an accounting discrepancy without breadcrumbs left behind, there is not a way for a person outside the company to know about the audit.
Generally speaking, audit documentation is meant to provide support for conclusions reached by the auditor and to provide evidence that the audit was performed according to GAS standards. Audit documentation also makes the planning, performance, and supervision of the engagement much easier. Finally, audit documentation serves as the basis for the quality review as well. Audit documentation provides support for the conclusions reached by the auditor. Auditors need to include enough documentation that would enable a third party to understand how their audit team reached the conclusion. Evidence that is contrary to the final conclusion drawn also needs to be included, along with resolutions of that contrary evidence. The relevant records to be retained include, but are not limited to, procedures that were performed in response to the contrary information, records of document consultations on or resolutions of the information, and differences in professional judgment among team members or others. Audit documentation should provide clear evidence that the auditor has complied with generally accepted accounting standards, auditing standards, or GAS. Why is this important? Well, because the PCAOB inspections assess a firm's compliance with GAS, and because when your firm gets sued, compliance with GAS will be one of your best defenses in court. But the threat of litigation or getting reprimanded by the PCAOB shouldn't be the sole reason an auditor documents the audit. Audit documentation shows that the audit was planned and well thought out.
An important role of the audit documentation is to help track what is done, when it is done, and by whom it is done. This is all laid out in the audit program, which helps keep everything organized in the planning phase on schedule. Another reason it is important to keep very accurate records and clear documentation throughout the audit is because this documentation is used for many types of reviews. AS 1220 and AUC 220 both require a review by a concurring partner. The concurring partner uses the audit documentation to make sure all GAS regulations were followed correctly and to make sure they can come to the same conclusion with the evidence provided. Another person who would use the audit documentation is someone new to the audit team, such as an intern. They will often look at prior year audit documentation to get an understanding of the client. As many interns know, when in doubt, sally out. Lastly, the PCAOB and AICPA peer reviews also occasionally happen, and they use the audit documentation. Bad audit documentation will make this process very difficult, and they might not even pass the peer review.
Any correspondence between the auditor and the client is kept as documentation or work papers. This can include engagement letters, financial statements, significant findings or issues, contracts or agreements, planning documents, understandings of internal controls, checklists, and memorandums. One type of audit documentation is planning stage documentation. AUC 315 requires that the auditors gain an understanding of the client's industry, internal controls, operations, and ownership structure. It is important for the auditor to have this background information and document their correspondence in order to have a higher quality audit. In accordance with AUC 315, the auditor must document discussions with the engagement team about the company's risk of material misstatements, key understandings about the company and its internal controls and the source of the information, finding risks of material misstatements and the relevant assertion level, and risks pertaining to the controls discovered during the planning stage. The auditor can utilize flowcharts, narratives, or diagrams in order to best understand the internal controls of the company. Using the planning stage documentation, the auditors can choose the best strategy to conduct the audit. The next type of documentation is fieldwork stage documentation. Auditors are required to keep documentation that would allow an experienced auditor with no prior experience with the company to understand the operations and risks involved with the company. The auditor must have an understanding of the nature and timing of the audit procedures, the results of the audit procedures, and significant findings during the course of the audit.
Following the completion of an audit, the auditing firm is to compile and retain a completed set of documentation, serving as a record of work performed. The final file, or binder, is to be completed within 60 days of the date of the auditor's report under ISA 230 or AUC 230, but for firms operating under the PCAOB, there are only 45 days for me to complete the engagement file. Now, this is not for the performance of additional audit procedures, but rather for the firm to have time to cross their T's and dot their I's. For examples of the types of processes that can be performed during this time, one helpful acronym is PECS. Don't forget chest day in the gym. The P in PECS stands for Previously Obtained and Discussed Audit Evidence that has been agreed upon by the relevant members of the engagement team prior to the date of issuance. E stands for Eliminating Superseded Documentation or Evidence. C, the completion of checklists relating to the file assembly process. Or S, sorting, collating, and cross-referencing work papers. All of these processes, while not a completely exhaustive list, are administrative and not performing new procedures. Now, after the 45-day deadline hits and the permanent file has been finalized, the PCAOB does not allow the removal of any type of documentation from the engagement binder. None. So do not delete it. The PCAOB standards do, however, allow for additional information if and only if the information is RAD. The reason for adding the documentation, the auditor or other professional's name who prepared the additional documentation, and the date. Never forget the date. Finally, as we all know, auditors are constantly under the microscope in their profession and are relied upon to maintain legal and ethical practices not only in their own work but also in the work of their clients. PCAOB AS 1215 requires firms to keep final audit documentation for at least 7 years, while AUC T30 and ISA 230 require the documentation to be kept for 5 years or more. If reviewers find your firm to be without this proper evidence, they will assume it's non-existent, like work-life balance at KPMG.
What viewers should take away from this discussion of audit documentation is its principle and function as the evidence base for supporting the conclusions made by auditors and should be retained for 5 to 7 years after the end of an engagement. That is the evidence pyramid. Documentation ensures that the evidence and reasoning behind an audit opinion is substantiated and able to be reviewed, not only for compliance with all of the appropriate accounting standards, but also for accuracy, like a marksman in the dead of night, pulling the bow back, shooting an arrow, and hitting dead center on its target. That's accuracy. That being the case, audit documentation also serves as a guide for the nature and extent of an engagement. That's according to SAS number 96. If there's ever a need for peer review or inspection of PCAOB, it's important that the audit documentation to have been done properly and in a complete manner.